Imagine a country brimming with potential, ripe for investment, a land where fortunes could be made. Now, imagine that the very people living there, the ones who know the land and its people best, are hesitant to put their money in. This is the paradox of Liberia. It's a nation attracting billions in foreign investment, yet a significant portion of its own people remain cautious. Liberia, a country on the west coast of Africa, boasts fertile land, abundant natural resources, and a young, eager workforce. Yet, it remains one of the poorest countries in the world, with a majority of its population living below the poverty line. Understanding this paradox is crucial to understanding Liberia's future. On paper, Liberia appears to be a land of opportunity. It boasts vast reserves of iron ore, rubber, timber, and gold, resources highly sought after in the global market. Its agricultural potential remains largely untapped, with fertile land capable of producing a variety of cash crops. Add to this a strategic location on the Atlantic coast, providing easy access to international shipping routes, and Liberia seems poised for economic takeoff. In recent years, Liberia has witnessed a surge in foreign direct investment, with billions of dollars pouring in from countries like China, Malaysia, and the United States. These investments span across various sectors, from mining and agriculture to infrastructure and telecommunications. However, this narrative of opportunity often clashes with the lived experiences of many Liberians, particularly those who have borne witness to decades of economic mismanagement, corruption, and conflict. The reasons behind the foreign investment flood in Liberia are multifaceted. Some investors are drawn by the high returns promised by resource extraction industries, particularly in mining and logging, where profit margins can be substantial. Others see Liberia as a strategic entry point into the West African market, a region with a rapidly growing population and increasing consumer demand. Government incentives also play a significant role in attracting foreign capital. The Liberian government has implemented policies designed to make Liberia an attractive destination for foreign companies. While foreign investors see opportunity in Liberia, many locals remain hesitant. This reluctance stems from a complex web of historical, economic, and social factors. Decades of conflict and instability have eroded trust in institutions and created a climate of uncertainty that makes long-term investment risky. The lack of basic infrastructure, such as reliable electricity, adequate transportation networks, and efficient port facilities, poses a significant challenge for local businesses. At the heart of the local hesitation lies a deep-seated trust deficit. Liberians have witnessed decades of broken promises, where governments and foreign entities have often prioritized self-interest over the welfare of the people. This history of exploitation and unfulfilled expectations has left many wary of new ventures, particularly those involving large-scale foreign investment. The legacy of conflict continues to cast a long shadow over the nation. One of the most significant hurdles facing local investors in Liberia is the lack of basic infrastructure. Roads, often impassable during the rainy season, make it difficult and costly to transport goods and services. Erratic electricity supply disrupts production and increases reliance on expensive generators, further eroding profit margins. The lack of reliable internet access, particularly in rural areas, hinders communication and limits access to information, putting local businesses at a significant disadvantage in an increasingly digital world. Access to capital is another major obstacle for local entrepreneurs in Liberia. The formal banking sector, still recovering from the war, remains underdeveloped and risk-averse. High interest rates, often exceeding 20%, make borrowing prohibitively expensive for many small and medium-sized enterprises. Stringent collateral requirements further exclude a significant portion of the population from accessing formal credit. The Liberian education system, devastated by years of conflict, faces immense challenges in equipping its citizens with the skills and knowledge needed to thrive in the 21st century economy. While literacy rates have improved in recent years, the quality of education remains low, particularly in rural areas where access to schools and qualified teachers is limited. This lack of quality education translates into a skills gap that hinders local participation in the formal economy. Many young Liberians lack the technical and vocational skills needed to secure jobs in sectors experiencing growth, such as mining, construction, and telecommunications. In the face of these challenges, many Liberians have turned to the informal economy for survival. Street vending, small-scale trading, and subsistence agriculture provide a vital safety net for millions. But this reliance on the informal sector comes at a cost. The informal economy is characterized by low productivity, limited growth potential, and a lack of access to social protections, such as pensions and healthcare. While it provides a source of income for many, it also perpetuates a cycle of poverty and limits the government's ability to collect taxes and invest in essential services. To truly understand the paradox of Liberian investment, we need to step into the shoes of both the foreign investor and the local entrepreneur. Imagine, for a moment, you are a venture capitalist from London, Dubai, or Beijing, with capital to deploy and an eye for emerging markets. Now, imagine you are a Liberian entrepreneur, perhaps a market vendor in Monrovia or a farmer in Lofa County. Bridging this gap is crucial for ensuring that foreign investment translates into inclusive and sustainable economic growth that benefits all Liberians, not just a select few. For many foreign investors, Liberia's primary attraction lies in its abundance of untapped natural resources. The country boasts vast reserves of iron ore, gold, diamonds, rubber, and timber. These resources represent a lucrative opportunity for companies involved in resource extraction. Beyond raw materials, Liberia's agricultural potential remains largely untapped. The country could become a major exporter of cocoa, coffee, palm oil, and rubber. However, resource extraction raises concerns about sustainability and equitable benefits. Investing in any frontier market involves a certain degree of risk, and Liberia is no exception. The country's recent history of conflict, coupled with ongoing challenges related to corruption, weak governance, and a lack of infrastructure, can make even the most seasoned investor think twice. However, for those willing to navigate these risks, the potential rewards can be substantial. Foreign investors, particularly large multinational corporations, often have the financial resources, risk tolerance, and long-term investment horizons that allow them to weather the ups and downs of investing in a volatile market like Liberia. They can afford to invest in security, infrastructure, and community relations, mitigating some of the risks that might deter smaller or local investors. Moreover, foreign investors often have access to sophisticated risk assessment tools, political risk insurance, and legal expertise that can help them navigate the complexities of operating in a challenging legal and regulatory environment. This ability to manage risk, coupled with the potential for high returns, makes Liberia an attractive destination for those seeking to diversify their portfolios and capitalize on emerging market opportunities. In a bid to attract foreign investment and stimulate economic growth, the Liberian government has implemented a range of incentives, including tax breaks, streamlined business registration processes, and guarantees on profit repatriation. These incentives are designed to make Liberia a more attractive destination for foreign capital and to level the playing field for companies accustomed to operating in more developed economies. While these incentives can be effective in attracting foreign investment, they can also create an uneven playing field for local businesses that often lack the resources and political connections to navigate the complexities of accessing these benefits. Moreover, excessive tax breaks can deprive the government of much-needed revenue that could be used to invest in education, healthcare, and infrastructure, ultimately hindering long-term economic development. Finding the right balance between attracting foreign investment and fostering the growth of local businesses is crucial for achieving sustainable and inclusive economic development. This requires ensuring that incentives are transparent, equitable, and aligned with the long-term development goals of the country, rather than solely focused on maximizing short-term profits for foreign investors. The long view, strategic positioning, and future potential. Beyond its natural resources, Liberia holds strategic importance for foreign investors seeking to gain a foothold in the West African market. The country's location on the Atlantic coast, its membership in the Economic Community of West African States, and its relatively stable political system make it an attractive hub for regional trade and investment. Moreover, Liberia's young and growing population, coupled with increasing urbanization and a burgeoning middle class, presents a significant market for consumer goods, financial services, and technological innovations. Foreign investors are increasingly recognizing this long-term potential, investing in sectors like telecommunications, retail, and infrastructure to capitalize on Liberia's demographic dividend. However, realizing this future potential requires addressing the underlying challenges that hinder economic growth and limit opportunities for local participation. Investing in education and skills training, improving infrastructure, and creating a more transparent and accountable business environment are essential for ensuring that all Liberians benefit from the country's strategic positioning and future economic growth. Bridging the gap, aligning foreign investment with local needs. For foreign investment to benefit Liberia, it must align with local community needs and priorities. This means focusing on sustainability, local content, and community development. Public-private partnerships can combine foreign expertise with local knowledge. They help finance and implement infrastructure projects that benefit both investors and communities. Ensuring profits are reinvested locally is crucial for growth. Local content requirements can create jobs and stimulate local businesses. The power of perception. Shifting the narrative on Liberian investment. Changing the perception of Liberia as a risky and challenging investment destination is crucial for attracting both foreign and domestic capital. This requires a concerted effort from both the government and the private sector to highlight success stories, showcase the country's untapped potential, and address the underlying challenges that deter investment. The government can play a key role in promoting transparency, strengthening institutions, and creating a more predictable and investor-friendly business environment. This includes tackling corruption, improving governance, and enforcing contracts, sending a clear signal to investors that Liberia is open for business and committed to creating a level playing field. The private sector, both foreign and domestic, also has a responsibility to engage in responsible business practices, investing in their workforce, minimizing their environmental impact, and contributing to the development of local communities. By demonstrating a commitment to ethical and sustainable business practices, the private sector can help shift the narrative on Liberian investment, attracting more capital and creating a more prosperous future for all. The year is 2019. The global economy is humming along. In Liberia, the scars of war are beginning to heal. Imani Capital announces a significant investment in a new agricultural project in rural Liberia. This project captures the imagination of both local communities and seasoned investors. The Imani Project empowers local farmers with training, resources, and market access. The Imani Project centers around cultivating a high-value, drought-resistant cassava, a staple crop in Liberia. Imani Capital partners with a local cooperative, providing technical expertise and improved seeds. They invest in a solar-powered processing plant, producing cassava flour, a key local ingredient. The project also offers microfinance, giving farmers access to affordable credit. This helps them invest, expand, and break free from poverty. Education and skills training are also provided, empowering farmers to improve their livelihoods and participate in the modern economy. The impact of the Imani project extends far beyond the cassava fields. As farmers' incomes increase and the local economy begins to thrive, a ripple effect of entrepreneurial activity spreads throughout the region. Small businesses, from bakeries and restaurants to mobile phone repair shops and hair salons, begin to sprout up, creating new jobs and opportunities for young people. The success of the Imani Project also attracts the attention of other investors, both foreign and domestic, who begin to see the potential of impact investing in Liberia. Microfinance institutions, inspired by the project's success in empowering local farmers, expand their reach, providing much-needed capital to small businesses and aspiring entrepreneurs. The government, witnessing the transformative potential of this new approach to investment, begins to implement policies that promote responsible business practices, local content requirements, and community engagement. A sense of cautious optimism begins to spread as Liberians begin to believe that a more equitable and prosperous future is within reach. Shifting tides, from skepticism to cautious optimism. The Imani Project becomes a turning point, a powerful demonstration that foreign investment, when structured thoughtfully and implemented ethically, can be a catalyst for positive change. It challenges the prevailing narrative of exploitation and mistrust, showing that a different path is possible, one where foreign capital works hand in hand with local communities to create shared prosperity. The project's success doesn't erase the deep-seated skepticism born from decades of broken promises and missed opportunities. Many Liberians remain wary, acutely aware that a single project, no matter how transformative, cannot single-handedly solve the country's deep-rooted challenges. Yet there's a palpable shift in the air. The Imani Project sparks a conversation, a national dialogue about the kind of development Liberia needs and the role that foreign investment can play in achieving that vision. Local communities, empowered by their experience with the Imani Project, find their voices, demanding greater transparency, accountability, and a seat at the table when decisions are made about the future of their land and their livelihoods. The challenge of sustainability, institutionalizing change. The Imani Project serves as a powerful reminder that achieving sustainable and inclusive economic growth requires more than just isolated pockets of success. It requires systemic change, a fundamental shift in the way investment is structured, regulated, and monitored. The challenge now is to replicate and scale up the Imani model, embedding its principles of community ownership, environmental sustainability, and shared prosperity into the very fabric of Liberia's economic development strategy. This requires a multifaceted approach involving the government, the private sector, civil society, and local communities working together to create an ecosystem that fosters responsible investment and equitable growth. The journey ahead will be long and arduous, fraught with challenges and setbacks. Corruption, weak governance, and a lack of capacity remain formidable obstacles. But the seeds of change have been sown, and a new generation of Liberian entrepreneurs, empowered by the Imani Project's success, is ready to take the reins and build a brighter future for their nation. The Liberian crossroads, a fork in the road. The disparity between foreign investors flocking to Liberia and the hesitation of its own people paints a complex picture. Foreign investors see untapped potential, while many Liberians remain cautious, scarred by instability and broken promises. This is not to say that foreign investment is inherently bad or that local Liberians are incapable of driving economic growth. Liberia stands at a crossroads. One path risks perpetuating dependency and environmental degradation. The other path offers a sustainable and equitable future, investing in people and fostering entrepreneurship, unleashing Liberia's entrepreneurial spirit. The key to unlocking Liberia's economic potential lies in igniting the entrepreneurial spirit of its people. Liberia is brimming with talented, resourceful individuals who can drive innovation and create jobs. Addressing systemic barriers, providing affordable credit, and investing in education are essential. Fostering a culture of innovation and celebrating entrepreneurial success can inspire a new generation. Section 3. A collective destiny, forging a path to shared prosperity. The future of Liberia depends on the collective efforts of its people, its government, and its international partners. It requires a shared vision of a more prosperous, equitable, and sustainable nation. The government must create an enabling environment for investment. This includes tackling corruption and promoting transparency. Investing in education, healthcare, and infrastructure is crucial. Foreign investors should engage in ethical and sustainable practices. They must consider the social and environmental impact of their investments. Respecting land rights and paying fair wages is essential. Ultimately, the responsibility for a brighter future rests with the Liberian people. By embracing entrepreneurship and demanding accountability, Liberians can shape their own destiny. The journey will be challenging, but the rewards are well worth the effort.